G'day traders, John from Crypto Candlestick Trading. Just doing a very quick update on the crypto market, and I have been doing some backtesting and want to explain a couple of things that I've been looking at and doing some backtesting on. And as we can see here, Bitcoin, the crypto market, Bitcoin here, we've gone up and then we traded lower, and where are we now? That's that was Bitcoin, and like we were just okay, so it's picking up a little bit now. That was a little bit red, just a couple of minutes ago. So yeah, like here we are. This is just sideways scrappy trading. We're under the 50. It's huge indecision here. We've attempted the 50 and failed. We've attempted the 50 bigger again and failed bigger. So increasing volume on the selling side. Risky business. Like this just sideways choppy sort of stuff is a good thing to stay away from, unless you're trading the 4-hour charts. Let's just have a look at the 4-hour charts, and I just want to show you what I have been doing my backtesting on. All these lines here will make sense in just a minute. So I moved, I've been, I know there's a lot of traders that trade with the average true range, and and a lot of them trade with the relative strength index. And so if we're going to look at, there's one thing that I look at, and I put it on my chart rarely, but every now and then, and that's the relative strength index, which is the one down here at the bottom. Now, what I'm after is, this moves a little bit slower than stochastics. So it does the same kind of job as the stochastics, but it just moves a little bit slower. So, and like there's big money use this one and stochastics. So now I found the only reason why I use stochastics more is because stochastics will show you a little bit faster what's going on. Now, this here seems to be, it happens quite a bit less, but in saying that though, even though it happens less, it's very credible. So let's just go, I'll just go back to where the backtesting was last night, because I got a few good results from it. And there was one that I was just looking at here a minute ago. I'll just open that up a little bit so we can kind of see it better. Now what I'm after here is I'm looking at, like an extreme, like I want to see below the oversold and above the overbought. And so down here, like that's an extreme, like we'll just kind of, that's got a long week. We kind of know what to do with that, but look at the sideways, choppy, sort of crappy trading after it. No good, Anyway, let's have a look here. So we've climbed up, bang. Now, all of a sudden, we should be on alert. Now, this needs to be back tested. I want to get, I want to find pairs that this work on, that this works on. On Bitcoin, it'll be great if we, I've found on Bitcoin, it kind of works, quite accurately, and so it's worthwhile having a look at and doing some back testing with, I believe anyway. So I'll probably spend the weekend going back, back testing this, see how it works, and but so far my results have been good. Now let's just go through some of those results and have a look. So up here we've got we're broken through the high with the relative strength index, and we've come up to here. Now all of a sudden we've reached this high here. So as soon as this breaks above the high, we should be on alert, or at this stage, from what I know of this so far, I should be on alert looking for potential reversals once this is broken out into its high. So we've come up to here. So all of a sudden we can see that there's potential resistance back at the same level. Now that we're broken out of this high here, and we've come up to here, it doesn't mean that we go short immediately. It just means that we should be on alert for potential short trades. So we've come up to here, Now I'll just open this up a little bit more so we can kind of see it a bit better. And then we're having a look at this here, and we can kind of see major indecision. All of a sudden we've come up there and touched, come down, and then we come up and we've made a shooting start at the south side. So it's gone up to here. Now, okay, if you were to get in somewhere around about here and go short, you would have made a little bit of, profit, whatever. And then it's gone up to here. Now this is trending up. Now, what the difference is here is we've got amateur investors still buying. Like, have a look at this, the break of the 200. And then, this would be mad to trade. Oh, actually, that was around about there. So I'll just move that back up to where it was. This would be, a pretty irresponsible trade, really, because we've got resistance there, resistance here, and we've got 200 and resistance there. So, it's no wonder why we get a shooting star and then it fails and closes below 2 moving averages, and look at the result after it. But let's have a look at what actually happened here. So we've got, it's gone up to here. So as soon as it's gone out of the extreme, like into the overbought, then we're looking for divergence, which basically means that there's more weakness in the market, as we can see as time goes on, And yet, why are we making higher highs? You know, there's more strength. And the thing is, as soon as the amateur investor pushes this up, someone's selling. And we know that it's not amateur investors that are selling. This is smart money that's up here selling. As soon as amateur investors are up there buy, buy, big money's in there selling. And we can see here that this is big money, smart money, taking their money out of the market. There's weakness in the market here while we're still showing strength. So here we are, we've got a line going up and we've got a line going down. That's what we're going to see from here on in, or, like with this strategy anyway. So we can see here that if we got into this one here and went short, or even short here, we wouldn't have lasted very long. But if we went short, even if we didn't take that one there, we were still a little bit bruised from this one here. If we had a look at that one there, didn't take this one, but we took the close below, perfect. And have a look at this, divergence. Great. All right, let's move on to the next one. We'll have a look at another example. I'll just shrink that up a little bit. Okay, so here we've got divergence again. I'll move that over so we're not haven't got all the stuff in. So here we go. We've gone. We've all of a sudden we've traded out and we've come down to a low, and that's this low. Actually, no, that low there. So if we have a look at the we'll have a look here. That low there was just to here. So it even went lower from there. So it went down to here. Now we've got divergence. There's more strength coming back into the market from here, but yet the prices kept on coming down. So here we go, selling at this stage here, and then we've got more strength coming back into the market. There's something wrong with this scenario. Now this is the same again. So let's just say that we saw this one here and we thought, oh, this is great. This could be a good reversal. Now I've gone up here. Now let's just say that we bought this one here as the potential for our reversal. We would have got stopped out very quickly after it. Now, but what we don't want to do is be buying straight away. What we want to do is be waiting to make sure that we've got confirmation before we buy. Now, obviously it's not going to work every time. If this was the confirmation, this one here, then, we would have been stopped out. This one here being the second entry, because of strength coming back into the market, even though there's weakness being shown with the candlesticks, if you were to be buying this one here, it would have been kind of, flatlined and not very good for a while. And then it's kind of taken off and gone pretty well after that. Now let's have a look here. So this actual peak is that candle where that blue line up the top there starts. This peak here is that candle right there. So from that candle there at its absolute peak, and then it started, weakness in the market started after this candle, but yet we're making new highs. And then we're in a perfect looking doji, shooting star again, closing below the 9. And then have a look at this. We've got divergence. We've got weakness in the market while amateurs are still buying. There's something wrong with this scenario. And even if we have a look back here, we've got support, resistance. And so, we need to kind of take these things into effect, especially when we see these kind of things here and like a little bit more confidence and, as to what we're going to be doing with this market. But here we've got the same again. So I'll move it out of the way of those little icons down there. So we've come down to the bottom here, but have a look at this. This is why we don't buy straight away. It's gone up there. There was definitely no buying here anyway. And but anyway, so we can see that strength is starting to come back into this market while we've got a massive decline happening. And so we can kind of see here that I can't really see. No, there's no entries that I can see in this here to go long anyway. If anything, there's entries to be going short. At this stage here. But what we can see here is we've got divergence. We've got lows, the highs. There's more strength coming back into the market while this is happening. So this to me would be an alert to say, hey, maybe we should be keeping our eye out for entries here. Now, remember, this is a sideways choppy market. So what would this be like if it's trending? This is what I want to go and backtest. I want to see what it's like in sideways markets and get a result for that. In bear markets, get a result for that. And also in bull markets and get a result for that. So I've got a fair bit of backtesting to do. So here we go. We're breaking these highs again. That's our actual peak. This one here where the blue line started, and we've gone up. We've trended up. Look at that beautiful looking doji up there. At that same resistance area. And this is while we're aggressively heading down. So there's a lot of money coming out of the market here while we're still trending up. The prices are still getting higher. And look at the result. Great result there. I'm not sure exactly where we would have been entering here. If it would have been red to green, maybe the stop. Close below the 9. Personally, this will be my second entry. I would much rather be getting in somewhere around here and then getting this as my second entry. Now, if that was the case, let's just say that we bought there 43.3, and then we've come down, and let's just say that we've come out down here, and we think, okay, we're looking for reversals now. Now, let's just say we get out somewhere around about here. I don't know, 43 to, you know, so 38 to 43, so there's 5,000. So what's that for? That's 12% if I'm right, about 12%. That's not bad, 12%. You know, it's not all that good either, but this is a sideways market. So now this is on the 4-hour chart too. So here we go. We're moving up again. We've got strength coming back into the market while there's more selling happening down here. And then, you know, like looking for buying here. Even if we were to get in somewhere around here, if we got in here, it wouldn't have, you know, wouldn't have lasted very long. This is where we need to decide at what stage do we decide that this isn't working anymore. And if it went down here, this would be mine down here, you know, like definitely, if I wouldn't have, you know, taken it out somewhere around here, you know, because a breakout shouldn't behave like this. You know, it shouldn't have like these hammers at the top here, and, you know, it just shouldn't be behaving like this. Also, you know, but we've got strength coming into the market, selling off. Now let's just go over and have a look. So that one there would be one that I would say didn't work. Now this one over here, look at that, beautiful closing, you know, like massive, you know, strength coming into the market here, and it's gone up to there. Now let's just have a look at where and why that's touched that line there. You know, is there anything? Okay, like, yep, okay. So we've got that there and that there. Now we can't really, I wouldn't really take that one there because this is only the second point. We can't really take that one. You know, this could be anywhere. Like we could have drawn that line to touch with this point here. Just because this has turned up, it doesn't mean we can use it. So there needs to be 2 points, and then a third point will come up and reach the other 2 points. So if we're having a look here at this stage, we've got, you know, like it's we're overbought at this stage here. We've gone up to here. So I'll be looking for reversals at this stage here, you know, up along these kind of levels here. Now, here we've got an engulfing, you know, so this is in the overbought area, and we've got massive, you know, well, there's weakness coming into the market straight away. Like we can see here from a high to a low there. And, you know, like this is almost like a double top sort of thing, even though like that kind of is, you know, heading up and, you know, going the same way as this here. But we can see that we've got an engulfing closing below. And then, you know, like we just look at that hammer there. You know, that's the reversal. This one here is an extremely strong reversal. So if I was to go short on that one there with my stops above the high here, that would be, you know, perfect. It'll be, you know, like that's a good entry. And have a look at the price here. So let's just pretend that that's $47.30 and that's $48.10. So if we were to be, you know, getting in somewhere here on the first red just after this one here, that's $47.30 with our stops at $48.30. So there's only $1 for our stops. That's what, 1/4%. You know, great, perfect. I'd have that any day. And anyway, have a look at the result after it. You know, like that's a good result. And here, so this is one of the times where it didn't work again. So here's 2 times that it hasn't worked. So here we've got, you know, we've got strength coming into the market. Not very strong, but it is strength coming back into the market after a sell-off. This was the sell-off here. So we've got more of a decline in the market here, but we know what to do when we've closed below the 50. If we close below the 50, I'm always looking for a pull back to the 50 and failure. And then same again, if we close below the 200, I'm always looking for a pull back, then failure. So if we're looking for a buy here, and we're doing end of candle data, and this is only on the 4-hour chart, remember? So we had a look at this one here, and then all of a, you know, that definitely is not a buy. And then, you know, if this closes below here, I remember, you know, I was shorting from here on. Actually, I think I was even shorting before that. I think I started shorting from here, and I was looking for second entries around here. But, you know, in any case, that there is no good. And, you know, like so, I was riding the market down at that stage there. Now let's have a look at this second last one here. So we're going up at this stage here. You know, there's more strength coming. Oh, actually, sorry. Let's go back to the start. Here, we've broken below. So we've got huge amounts of weakness in the market. We've come down here. So now, you know, the market kind of goes a little bit higher and stuff like that. And then it comes down. And then, you know, so the market is actually heading down while this is heading up. And it's gone up. And anyway, so if we were to get into this one here, obviously we would have been stopped out shortly after it. But, you know, would you really buy this one, you know, like being this far away from the 50? Once we close below close below the 200, come down, and now an attempt at the 50, it would be very typical, and then, you know, it will fall off. So I would not be buying this kind of scenario here, and even this candle here, because look at the resistance that we've got above it straight away. We've got the 50 and the 200, and that's on the 4-hour chart. We don't know what it looks like on the daily chart either. And then down here, we've got this, and we're, you know, so we're still trading lower while there's more strength coming back into the market. Now we've gone up here, we've broken above there. If you took that entry and lost, taking this entry here, a close above with strength coming to the market, it looks pretty good. But it's gone up, and then it's gone up a little bit. Now look at this, it's come up to here, we've got a shooting star. Now the same again, this is only just touch. So like, can you really count this? Yeah, no, maybe. This needs to be tested. And so here we've got a high and we've got more strength, more buying coming back into the market. And then we've got a shooting star near the 200. And then this is the result of what's happened. But we've got more selling. We've got a decline. We've got more money coming out of the market by the smart money. And yet we've got the amateurs still buying. And then that's why the shooting star happened. Harami shooting star at the 200. Now we've got a big solid closing candle below the 9. And now we're closing and living below the 50 at this stage here. Anyway, traders, I don't want to go on for too long. That's just an example, and I just, I'm always looking for anything that's kind of, it's going to add to our tool bag to say, like to give us better percentages, basically. And so, like, I'm just kind of looking at this thing here. It's not perfect yet, but it's definitely got, it's definitely looking pretty good at this stage here. So I'll go and go for a back test, all this sort of stuff, and clean up these charts a little bit more and make it a little bit better. But I do like what I'm seeing at this stage here, and I'll go through and back test it and give some results later on. This spinning top looking thing here, this is, usually you find these at the start of an aggressive move. So whether this move is going to be to the upside or to the downside, I don't know. But one thing we can see here, I got this alert just here, because once it gets close to this candle here, I want to know about it, because if this breaks below here and closes below here, it's not going to be very good for the uptrend. But another thing we can see here is we've got, lows, highs, higher lows, higher highs, higher low at this stage here. But, there's so much. This is just looking at it all the way from back here. This is just sideways, sort of choppy sort of action. If you're going to trade this, it's the shorter term time frames. I wouldn't be in the daily anywhere near as much as I am in the 4-hour chart. Except when I see things like this. Beautiful looking shooting stars off the 200 major resistance areas. And the same again. This is a buy for a candlestick investor. But, coming over here with the 50 just above us here, I'm just a bit funny about it. And straight away we've got resistance, support, and we've got resistance there at the same price around about. So actually, I can just see one thing there. No, I got a different one, different tool there. So let's just, having a look around about there somewhere. Just put all those lines there. Got a high there and a high there, and we've got a little bit of support there, and we've come up and found resistance out that support where the 50 is at the same time. I'll get rid of that drawings again. Anyway, traders, hope you have a good weekend. If you have any problems with the charts, you need to talk about the charts at all, please let me know. More than happy to talk about charts. Okay, I hope you have a good weekend. Talk to you again soon. See you.